Picture this. It's a Tuesday night in March 2019, and I'm staring at my trading screen, watching $50,000 of my capital evaporate in real time. My fingers hovering over the sell button, my heart pounding so hard I can feel it in my throat. The voice in my head is screaming at maximum volume, "Cut your losses! Get out now! You're about to lose everything." But it didn't click. In that single moment of restraint, that agonizing decision to do nothing, when every fiber of my being was screaming to do something, changed everything about how I approach trading forever. If you've ever felt like the market is personally testing your sanity, if you've made trades you regretted within minutes of placing them, or if you've wondered how some traders seem to have ice water running through their veins while you're drowning in a sea of emotion, stay with me, because what I'm about to share isn't just theory pulled from trading textbooks or recycled wisdom from financial gurus who have never risked their own money. This is blood, sweat, and tears from 15 years of professional trading. This is about the battles fought not on charts or with indicators, but in the 6 inches between my ears. And most importantly, this is about the one psychological skill that separates consistently profitable traders from everyone else who gets chewed up and spit out by the markets. Today, we're diving deep into the silent killer of trading accounts, and I guarantee it's not what you think it is. Personal story and problem setup. Let me take you back to my third year of trading, when I was absolutely convinced I had cracked the code. I had spent countless hours mastering technical analysis, memorizing chart patterns, understanding support and resistance levels. I had developed what I thought was bulletproof risk management protocols. My trading strategy was back-tested to perfection. On paper, it showed consistent profitability with manageable drawdowns. I remember feeling invincible. I had this arrogant confidence that comes from a little bit of knowledge and a dangerous amount of overconfidence. I thought the only thing standing between me and consistent profits was more screen time and better pattern recognition. But there was one massive problem. I was my own worst enemy, and I didn't even realize it. Let me tell you about a trade that still haunts me to this day. It was October 2011, and Netflix was setting up for what looked like a textbook perfect breakout pattern. Everything aligned beautifully. Volume was building. Momentum indicators were showing strength. Multiple support levels were holding firm. My systematic approach gave me a crystal clear entry signal at $387 per share. But instead of taking the trade immediately like my rules dictated, I hesitated. That little voice in my head started whispering doubts. What if this is a false breakout? What if you're wrong? What if you lose money on this trade? Remember what happened last week when you took that similar setup? So I waited and watched. The stock moved to $390, then $395, then $402. Each uptick felt like a knife twisting in my gut. Finally, FOMO, the fear of missing out, kicked in like a powerful drug coursing through my system. The rational part of my brain shut down completely, and I jumped in at $405 per share, a full $18 above my planned entry point. You can probably guess what happened next. The stock reversed immediately, like the market gods were personally laughing at my impatience. I watched my position bleed red as Netflix dropped back below my original entry point. What should have been a profitable trade based on solid analysis became a losing trade because I couldn't control my emotions. That night, lying awake in bed, staring at the ceiling at 3 a.m., I realized something that would fundamentally change my entire trading career. The market wasn't my enemy. The charts weren't conspiring against me. My biggest enemy was sitting in my chair every single day, looking back at me in the reflection of my computer screen. My impatience was killing my trading account, one emotional decision at a time. The hidden truth about trading success. Here's what nobody tells you when you start your trading journey, what no course or seminar or YouTube guru wants to admit. Success in this game has very little to do with predicting market direction and everything to do with managing your own psychology. I've been trading professionally for 15 years now. I've mentored hundreds of aspiring traders, watched countless students go through the same emotional roller coaster I experienced. And I can tell you with absolute certainty, backed by years of data and observation. That the difference between those who make it in this business and those who blow up their accounts isn't intelligence. It isn't even having a superior trading strategy. It's something far more subtle and infinitely more powerful. Something that can't be programmed into an algorithm or bought from a trading education company. It's patience. But not the kind of patience you're probably thinking about. Before you roll your eyes and think, great, another trading guru telling me to just wait and hold, let me explain what I really mean. Because patience in trading isn't passive. It's not sitting around hoping and praying for the best while crossing your fingers. It's an active, disciplined, almost militant approach to self-control that most traders never truly understand. When Warren Buffett famously said, "The stock market is a device for transferring money from the impatient to the patient," he wasn't just being clever or quotable. He was revealing the most fundamental truth about how markets actually work. You see, every single time you make an impulsive trade, every time you chase a move you've already missed, every time you panic sell during what turns out to be just a normal pullback, you're literally handing your hard-earned money to someone on the other side of that trade who's willing to wait for the right opportunity. Think about that for a moment. Somewhere out there is another trader, probably sitting in their office or home, who's been patiently waiting for exactly the setup you just panic sold. While you're letting fear drive your decisions, they're calmly taking the other side of your trade, knowing that emotional decisions rarely lead to profitable outcomes. This isn't theory. This is the cold, hard reality of how markets transfer wealth from emotional participants to disciplined ones. The anatomy of impatience. Let me share another story that really crystallized this concept for me, a trade that taught me more about patience than any book or mentor ever could. It was early 2018 and I was analyzing crude oil futures. Based on my technical analysis, fundamental research, and market sentiment indicators, everything pointed to a massive breakout above the $75 per barrel level. The setup was beautiful. Multiple time frame alignment, decreasing supply concerns, geopolitical tensions building. My conviction level was through the roof. But here's the thing. The setup took 3 months to fully mature. 3 long, agonizing months of watching, waiting, analyzing, and most importantly, resisting the overwhelming urge to jump in early just to get positioned. During those 3 months, I watched other traders in my network get increasingly frustrated. They complained about boring markets and sideways action. I saw them abandon their oil positions to chase other hot trades, cryptocurrency breakouts that fizzled, tech stock momentum plays that reversed, forex pairs that went nowhere. The social media trading groups I followed were full of complaints about the lack of volatility, about markets that weren't moving fast enough to satisfy their need for constant action. Traders were jumping from setup to setup, from strategy to strategy, desperately searching for that quick hit of dopamine that comes from a fast winner. But I waited. Because somewhere in those 3 months of disciplined observation, I had learned to understand something that took me years to fully grasp. The market doesn't operate on my timeline. It doesn't care about my monthly bills, my profit targets, or my need to feel like I'm actively doing something productive. The market operates on its own timeline, governed by forces much larger than any individual trader's desires or emotions. When crude oil finally broke out above $75, it didn't just creep higher, it exploded. In just 2 weeks, it rocketed from $75 to $85 per barrel. That single trade, the result of 3 months of patient waiting, generated more profit than most traders make in an entire year. And it happened because I had finally learned to embrace the one thing that feels most uncomfortable in our instant gratification, Amazon Prime fast food world. I had learned to wait, but here's what I discovered about patience in trading. It's not just about waiting for entries. True trading patience operates on multiple levels. Patience for the right setup. Not every chart pattern is worth risking your capital on. Over the years, I've learned to let dozens of okay opportunities pass by while I wait for the exceptional ones. The setups that meet every single one of my criteria, not just most of them. Patience for proper confirmation. Even when a setup looks perfect on the surface, having the discipline to wait for that final confirmation signal. The volume spike, the breakout above resistance, the momentum shift, can mean the difference between a profitable trade and a loser. Patience through normal market volatility. Once you're in a position, having the mental fortitude to ride through normal market noise instead of getting shaken out on every minor pullback or temporary adverse move. Patience for full profit targets. This might be the hardest lesson of all. I've watched countless traders turn winning trades into break-even trades, or even losers, because they couldn't wait for their predetermined profit targets. They grabbed quick profits out of fear that the market might reverse, only to watch their former positions continue moving in their favor for days or weeks afterward. The science behind market patience. Now, you might be wondering, why is patience so difficult for traders? Why do we naturally gravitate toward impulsive, emotional decision-making when logic tells us that patience should be easier? The answer lies in how our brains are wired. Human beings evolved over thousands of years to make quick decisions in life or death situations. When our ancestors encountered a predator, those who stopped to analyze the situation often didn't survive. Those who acted quickly, fight or flight, lived to pass on their genes. This evolutionary programming served us well for survival, but it's absolutely devastating for trading success. When you see a stock price moving rapidly, your ancient brain interprets this as an urgent situation requiring immediate action. Your amygdala, the fear center of your brain, starts firing, flooding your system with stress hormones like cortisol and adrenaline. In this heightened state, your prefrontal cortex, the part of your brain responsible for rational thinking, planning, and impulse control, gets suppressed. You literally cannot think clearly when you're in this emotional state. This is why traders make their worst decisions during periods of high market volatility or when they're under pressure. But here's the fascinating part. Professional traders who've mastered patience show completely different brain activity patterns. Studies using functional MRI scans have shown that experienced traders who consistently demonstrate patience have stronger neural pathways between their prefrontal cortex and their limbic system. They've literally rewired their brains to maintain rational thinking even under stress. This isn't just theory, this is measurable scientific fact. Patience in trading isn't just a nice-to-have character trait, it's a fundamental rewiring of your neural circuitry. I experienced this transformation firsthand. In my early trading days, I remember my heart racing every time I placed a trade. My palms would sweat, my breathing would become shallow, and I'd find myself constantly checking positions every few minutes. I was operating from a state of chronic stress and emotional reactivity. But as I developed genuine patience, through practice, discipline, and countless hours of self-observation, something remarkable happened. The same market movements that used to trigger intense emotional responses began to feel routine, almost boring. I could watch my positions move against me temporarily without feeling the urge to panic sell. I could see incredible setups developing without feeling the compulsion to jump in before they were fully formed. This isn't about becoming emotionless or robotic. It's about developing what I call emotional regulation under pressure, the ability to feel the emotions without letting them drive your decisions. The practical framework: building trading patience. Now, let me share the specific framework I developed over years of trial and error, a system that helped me transform from an emotional, reactive trader into someone who could maintain discipline even during the most challenging market conditions. The three-question filter. This is my first line of defense against impulsive decisions. Before I even consider placing any trade, I ask myself these three critical questions. Does this setup meet all of my predefined criteria, or am I trying to force something that's almost good enough? Am I considering this trade because of objective analysis or because of an emotional need to be active in the market? Can I wait for proper confirmation signals, even if it means potentially missing this particular opportunity? If any of these questions reveals that emotion or impatience is influencing my decision-making process, I immediately step away from the computer. No exceptions, no rationalizations, no just this once compromises. Let me give you a real example of how this works in practice. Last month, I was watching Apple set up what looked like a beautiful ascending triangle pattern. The stock had been consolidating between $185 and $190 for several weeks, and it appeared to be coiling for a breakout. My initial instinct was to buy immediately at $187, anticipating the breakout. But when I ran through my three-question filter, question 1, does this meet all my criteria? The answer was no. I wanted to see volume expansion and a clear break above $190 with authority. Question 2, is this analysis or emotion? Honestly, it was partly emotion. I had been sitting on the sidelines for a week, and I felt the need to be doing something. Question 3, can I wait for confirmation? This was the hardest one to answer honestly, but I realized I was trying to anticipate rather than react to a confirmed signal. So I waited. 3 days later, Apple broke above $190 on massive volume. Exactly the confirmation I had been waiting for. I entered at $190.50, and the stock moved to $197 over the next week. By waiting for proper confirmation, I not only avoided a potential false breakout, but also entered at a much better risk-reward ratio. The waiting game protocol. This is something I developed after that disastrous Netflix trade I mentioned earlier. When I identify a potential setup forming, instead of immediately planning my entry and getting emotionally invested in the outcome, I do something that might seem counterintuitive. I force myself to wait a minimum of 24 hours before taking any action. During that mandatory 24-hour cooling-off period, I reanalyze the setup with fresh, objective eyes. Check my emotional state and motivation for wanting the trade. Review similar historical patterns and their outcomes. Confirm the setup still meets all my criteria after sleeping on it. Consider what could go wrong and how I would handle different scenarios. You'd be amazed at how many perfect setups look mediocre or flawed after 24 hours of objective analysis. This waiting period acts like a circuit breaker for my emotions, preventing me from making decisions in the heat of the moment. The Patience Journal. Every Sunday evening, I spend 30 minutes reviewing my trading week through the lens of patience. I specifically look for trades I took too quickly that I should have waited on, opportunities I patiently waited for that eventually paid off, times I successfully resisted the urge to overtrade or chase moves, instances where impatience cost me money or profits. This isn't just record keeping, it's reinforcement training for my subconscious mind. I'm literally programming myself to associate patience with positive outcomes and impatience with negative consequences. Let me share some actual entries from my Patience Journal to show you how this works. Week of March 15th, 2023. Impatient decision. Jumped into Tesla at market open Tuesday without waiting for my volume confirmation signal. Reason. Felt like I was missing out after seeing it gap up. Result, minus 2.8% loss when it reversed an hour later. Patient decision. Spent 6 days watching Microsoft build a base around $310. Waited for my exact entry criteria even though I was tempted to enter early multiple times. Finally got my signal on Friday afternoon. Result, plus 6.2% gain over the following 3 days. Key insight. The Microsoft trade not only made back the Tesla loss, but proved once again that good things come to those who wait for quality setups. The opportunity cost analysis. One of the biggest challenges with patience is the fear that you're missing out on profits by waiting. To combat this, I developed a simple but powerful mental framework I call opportunity cost analysis. Whenever I feel the urge to jump into a trade before it's fully confirmed, I ask myself, what's the real cost of waiting versus the cost of being wrong? If I wait and miss the trade entirely, I've lost a potential opportunity. But if I jump in early and the setup fails, I've lost actual money, and money is much more valuable than hypothetical profits. This might seem obvious, but in the heat of the moment, when you're watching a stock move in your favor without you, it's easy to forget this fundamental truth. Missed opportunities cost you nothing except regret. Bad trades cost you real capital that you need to compound over time. Advanced patience techniques. As I evolved as a trader, I discovered that basic patience, simply waiting, wasn't enough. I needed to develop what I call active patience, a dynamic approach to waiting that keeps me engaged and prepared while avoiding impulsive actions. The layered entry strategy. Instead of trying to time the perfect entry point, I learned to build positions gradually over time. This technique satisfies the part of me that wants to take action while still respecting the need for patience. Here's how it works. When I identify a high conviction setup, instead of putting all my intended position size on at once, I divide it into 3 or 4 smaller entries, spread out over time or price levels. For example, if I want to build a $10,000 position in a stock, I might start with $2,500 when the basic setup appears, add another $2,500 when I get additional confirmation, $2,500 more on any pullback to support, and the final $2,500 only if all my criteria align perfectly. This approach has several psychological benefits. It satisfies my need to take action without going all in on an incomplete setup. It allows me to average into better prices if I'm early. It reduces the emotional pressure of trying to time the perfect entry. It gives me multiple opportunities to assess the setup as it develops. The reverse psychology technique. Sometimes the hardest part about patience is the constant mental chatter telling you to do something. To combat this, I developed a technique I call reverse psychology. When I'm watching a setup develop and feeling impatient, instead of fighting the urge to trade, I lean into it deliberately. I tell myself, okay, I really want to take this trade right now. Let me spend the next hour thinking about all the reasons why I should enter immediately. Then I write down every reason I can think of for taking immediate action. Usually, the list includes things like, the stock is moving higher and I might miss the move. I've been waiting too long already. I need to make money this week. What if this is the big winner I've been waiting for? After I've exhausted all the reasons for immediate action, I write a corresponding list of reasons to wait. My criteria aren't fully met yet. I have no predetermined exit strategy. I'm acting out of FOMO rather than analysis. Patience has served me well in the past. This exercise usually reveals that my desire to trade immediately is emotional rather than logical. By the time I finish writing both lists, the urgent feeling has usually passed, and I can make a more rational decision. The scenario planning exercise. Another advanced patience technique I use is scenario planning. When I'm waiting for a setup to fully develop, I spend time thinking through various scenarios and how I would respond to each one. For a typical breakout trade, I might consider, what if it breaks out on low volume? I probably wouldn't take it. What if it breaks out but immediately reverses? I'd exit according to my stop-loss rules. What if it breaks out perfectly but then consolidates for weeks? I'd hold based on my time stops. What if it never breaks out and just continues sideways? I'd move on to other opportunities. This mental preparation serves 2 purposes. It keeps my mind engaged during the waiting period, making patience feel more active. It prepares me to respond quickly and appropriately when the setup finally resolves. By thinking through scenarios in advance, I'm much less likely to make emotional decisions when the actual events unfold. The emotional journey of developing patience. Let me be brutally honest with you about something. Developing real trading patience is one of the most emotionally challenging things you'll ever do. It goes against every instinct you have as a human being in our fast-paced, instant gratification world. There were times during my development as a trader when the waiting felt physically painful. I remember sitting at my computer, watching a beautiful setup form, feeling like I was going to crawl out of my skin if I didn't take some kind of action. My hands would literally shake with the effort of not clicking the buy button. I went through what I now recognize as the 5 stages of developing trading patience. Stage 1, denial. I don't need to wait. I can see what's going to happen. Why should I wait for more confirmation when the outcome is obvious? Stage 2, anger. This is stupid. I'm missing all these moves while I'm sitting here overthinking everything. Other traders are making money while I'm paralyzed by analysis. Stage 3, bargaining. Maybe I can modify my criteria slightly. Maybe this setup is close enough to my ideal parameters. Maybe I can enter a small position now and add more later. Stage 4, depression. I'll never be able to do this. I'm not cut out for trading. Maybe I should just buy index funds and forget about active trading. Stage 5. Acceptance. Patience is a skill that requires practice. Every time I wait successfully, I'm building a stronger foundation for long-term success. The transition from stage 4 to stage 5 was the most important breakthrough in my trading career. It happened during a particularly challenging period in late 2016, when I had gone 3 weeks without taking a single trade. Not because there was no market activity, but because nothing met my criteria completely. I remember feeling like a failure, like I was missing out on profits while other traders were actively making money. But then I looked at my account balance and realized something profound. By not trading, I hadn't lost any money. While other traders in my network were giving back profits from impulsive trades, my capital was preserved and ready for the right opportunity. That realization shifted my entire perspective. I stopped viewing periods of inactivity as lost time and started seeing them as capital preservation, which is just as important as capital appreciation. The compound effect of patience. Here's something that took me years to fully understand. Patience in trading compounds, just like investment returns. Each act of disciplined waiting makes the next act of patience easier. Each time you successfully resist an impulsive trade, you're strengthening your ability to wait for better opportunities in the future. Let me share some specific numbers to illustrate this point. In my first 3 years of trading, when I was struggling with impatience, my win rate was approximately 52%. Not terrible, but not great either. More importantly, my average losing trade was about 1.8%, while my average winner was only 2.1%. The math was barely in my favor, but as I developed patience and started waiting for higher quality setups, something remarkable happened to my statistics. My win rate increased to about 58% because I was only taking the best setups. My average losing trade decreased to 1.2% because I was waiting for better risk-reward ratios. My average winning trade increased to 3.4% because I was holding winners longer. But here's the most important change. My trading frequency decreased by about 60%. I went from taking 5 trades per week to taking 8, 10 trades per month. Initially, this felt like I was being less productive. But when I calculated my monthly returns, I discovered I was making significantly more money with far less stress and screen time. This is the compound effect of patience in action. By waiting for only the highest probability setups, each trade had a much better chance of success. By holding winners longer, I maximized the profit from each correct decision. By taking fewer trades overall, I reduced transaction costs and emotional wear and tear. The most successful traders I know, the ones managing millions of dollars and consistently generating strong returns, typically take far fewer trades than you might expect. They're not constantly buying and selling, constantly active in the market. They wait patiently for exceptional opportunities, then position size appropriately when those opportunities present themselves. The ripple effects beyond trading. Something unexpected happened as I developed patience in my trading. It began to positively impact every other area of my life. The mental discipline required to wait for the right trade setup started spilling over into my personal decisions, my business choices, even my relationships. I found myself making better long-term decisions because I was less driven by immediate gratification. I stopped jumping into business partnerships without proper due diligence. I became more thoughtful about major purchases, waiting to see if my initial enthusiasm was justified or just impulsive desire. In my personal relationships, I became a better listener because I had learned to be comfortable with silence and waiting. Instead of immediately responding to every comment or situation, I would pause, think, and then respond more thoughtfully. This isn't just my personal experience. I've seen the same pattern with dozens of traders I've mentored over the years. The psychological skills required for successful trading: patience, emotional regulation, delayed gratification, systematic thinking. These skills enhance your effectiveness in virtually every area of life. One of my former students, Sarah, told me that learning to be patient with her trades helped her become a more patient parent. She stopped reacting immediately to her children's behavior and started responding more thoughtfully. which dramatically improved her family dynamics. Another student, Mike, applied his trading patience to his career decisions. Instead of jumping at the first job offer he received, he waited for an opportunity that truly aligned with his long-term goals. That patience led to a position that doubled his salary and put him on a much better career trajectory. The mental muscles you develop through trading patience, the ability to delay gratification, to think long-term, to control emotional impulses, these are some of the most valuable skills you can develop in our impulsive, reactive world. Practical implementation, your 30-day patience challenge. Now, I want to give you a concrete plan for developing this skill. Over the next 30 days, I challenge you to implement what I call the patience protocol. This isn't theory. This is a practical system that will measurably improve your trading discipline. Week 1, observation and awareness. For the first week, don't change anything about your trading. Just become aware of your impatience patterns. Keep a simple log noting. Every time you feel the urge to enter a trade before your criteria are met. Every time you exit a trade earlier than planned due to anxiety. Every time you chase a move you've already missed. Every time you feel restless when the market is quiet. The goal isn't to judge yourself or feel bad about these impulses. The goal is simply to become consciously aware of when and how impatience shows up in your trading. Week 2, the 24-hour rule. Starting in week 2, implement a mandatory 24-hour waiting period before taking any new position. When you identify a potential trade, write it down with all your analysis, then wait until the same time the next day before acting on it. During this week, you'll probably miss some trades that would have been profitable. That's okay. The goal is to start building your patience muscle, not to maximize short-term profits. Week 3, quality over quantity. In week 3, commit to taking no more than 2 trades total for the entire week, regardless of how many opportunities you see. This forces you to be highly selective and to wait only for your absolute best setups. This will feel extremely uncomfortable if you're used to being more active. That discomfort is actually a sign that the exercise is working. You're breaking old patterns and building new neural pathways. Week 4, integration and refinement. In the final week, combine everything you've learned. Continue with selective trading, but now focus on holding your winners longer than usual. If your normal profit target is 3%, try holding for 4% or 5%. If you usually sell after 3 days, try holding for a week. At the end of the 30 days, compare your results to your previous month's performance. I'm willing to bet that despite taking fewer trades, your overall profitability and emotional well-being will have improved significantly. The long-term vision. As we wrap up this deep dive into trading patience, I want you to think about something. What kind of trader do you want to be 5 years from now? Do you want to be someone who's still struggling with the same emotional patterns, still making impulsive decisions, still frustrated by your inability to consistently execute your trading plan? Or do you want to be someone who's developed the mental discipline to wait for exceptional opportunities, someone who can sit calmly through market volatility, someone who's built wealth through patient, systematic decision-making? The choice is entirely yours, but understand that developing genuine patience isn't a quick fix or a weekend seminar solution. It's a gradual transformation that happens through daily practice, consistent self-observation, and a commitment to long-term improvement over short-term gratification. Every single day that you choose patience over impulse, every trade where you wait for full confirmation instead of jumping in early, every time you resist the urge to chase a move you've missed, you're making a deposit into your future success account. The most successful traders I know aren't the flashiest or the most aggressive. They're the most patient. They're the ones who've learned to let the market come to them instead of constantly chasing after the market. Remember that story I told you at the beginning about watching $50,000 disappear at 2:47 a.m.? The reason I didn't panic and sell wasn't because I had ice in my veins or some supernatural ability to ignore pain. It was because I had spent years training myself to distinguish between temporary market noise and genuine threats to my capital. That position, which looked so terrible in the middle of the night, recovered completely over the following weeks and eventually became one of my most profitable trades of the year. But it only worked out because I had developed the patience to ride through the temporary discomfort. Final thoughts and call to action. If you take just one thing from this entire discussion, let it be this. Patience isn't just a nice to have quality for traders. It's the fundamental skill that separates long term winners from everyone else, who eventually gets destroyed by the markets. Start developing this skill today. Not tomorrow, not next week, but today. Begin with small acts of patience, waiting an extra hour before entering a trade, holding a winner for one more day than usual, or simply closing your trading platform when you feel the urge to overtrade. These small acts of discipline will compound over time into the kind of trading patience that can genuinely transform your results and your life. Your future self will thank you for every moment of patience you practice today. The markets will always be there tomorrow, but your capital is finite and precious. Protect it through patience, grow it through discipline, and watch as your trading and your life transforms in ways you never thought possible. The journey to trading mastery begins with a single patient decision. Make that decision today and begin building the foundation for long-term success. Thank you for investing this time in your development as a trader. If this resonated with you, I'd encourage you to subscribe to the channel and share this with other traders who might benefit from these insights. Remember, patience isn't just waiting, it's preparing for success while you wait. Until next time, trade well, trade patiently, and keep building that discipline that will serve you for decades to come.